Yo, what's going on, ladies and gentlemen, beautiful people? It's me, your boy Nes here. And in this video, I'm going to cover some candlestick patterns, and I'm also going to cover harmonic patterns. All right, so I'm going to keep this as simple as possible. I'm not going to teach you how to create your own harmonic patterns or how to draw it out, how to identify them exactly, but I will show you basically the patterns that you need to look out for. There's a tool that I use, and we'll talk about it another time, but there's a tool that I use that scans for both candlestick patterns and also harmonic patterns. All right, so look, let's go right here in the charts. As you see over here, this is one of my special strategy charts where I have a couple strategies on this, and based on you know how I'm feeling with the market, you know, we could go and switch it to another strategy. I don't know what's the deal with this right here. It looks kind of funny. But I have trending strategies, I got scalping strategies, I got all this stuff right over here, and it's there for your convenience. So only members of Binary Effects are able to have access to this. But for the most part, we're gonna stick with TradingView. Okay. Now, when we are on TradingView, you know, this is as bare as you get it. We already went through how to look at how to look for lows and highs, how to do SRT, support, resistance, trend lines, all that good stuff. We went over this stuff a couple of times already. And so what we want to do at this point is just kind of show you the graphic on how it works. Now, I'm going to take the source from Trading Sim over here. So candle pattern reference. Here's a good one right over here. We can, you know, go right into it and talk about it. Okay, so let me actually pull up one of my graphics up here. All right, let's pull up the candlestick pattern. All right. And here's the deal, right? We as human beings, right? We have habits. Those habits form patterns in the market. If we're looking at a pattern, right, based on patterns that displayed themselves before in the market, we know what the market may just do next. Is it guaranteed? No, it's not guaranteed. There's nothing guaranteed when it comes to trading. It's all involving risk, including some of all your initial investment. Every day is a new battle. Past performance never guarantees future results, right? Those disclaimers are pretty much standard, you know, throughout all trading methods, right? Now, here's the bullish, neutral, and bearish candles. All right, we're going to start off with the single candle patterns, all right, such as the hammer. So right over here, you have 3 bearish candles going down. All right, market drops down over here, but it doesn't close there. It closes up here, forming that hammer candle. Now there's a single candle pattern. So the singular candle is telling us, hey, look, it's done dropping and it's getting ready to rise. And next thing you know, the market starts to rise. Inverted hammer, okay? So kind of a similar situation where the market is dropping down. Okay, and then it creates kind of that Thor's hammer where the hammer is towards the floor, right? So it hits the low and then it starts going up. So this is the inverted hammer. So whether it's a hammer or inverted hammer, you already know what it is. All right, it's going to be a change in direction, and that direction is going to start to go bullish, hence that it's in the bullish single candle patterns. All right, dragonfly doji. Okay, so in this case, you know, very similar to the hammer. Where you know the market is going down in this example, and then it comes to a halt. Here's a long wick, all right, but it doesn't stop there. Essentially, the open and closing price is right next to each other, as opposed to the hammer where the open and closing price is just a little divided between each other, a little gap between those. Right over here at the dragonfly doji, it's basically the same. All right, and here we have a bullish spinning top. Now we're covering the single candle patterns first. The neutral candles are going to be the spinning top. All right, this represents like, hey, there's going to be a change that's about to occur, whether the market was downtrending or uptrending or whatever it was. When you see this, you know that the market is getting ready to shift directions. Here's a standard doji. All right, as you can see, it's a cross. It got a long wick. All right, you know, above the open price. and the closing price of, you know, a big wick below it. So it has two big wicks, okay, on you know, the top and the bottom, and the open and closing price is essentially the same. This right here would be a dragonfly doji, all right, right over here, okay, where opening and closing price is the same, but the wick is all on the top. There is no bottom wick, okay? Now, here's the harami right over here. As you can see, it's pretty neutral. You kind of, you know, you kind of see this a lot in the market. So when I put on one of my scanners that I'm going to give you guys free access to, you're going to see there's a lot of haramis in the market, all right, that show themselves. Here's the Marubozu right over here, all right? So these are candles that don't have a wick in the top, don't have a wick in the bottom, all right? So that's how you can identify those. So when you see these, it's basically like, okay, it's getting to a neutral zone, because we all know that when it comes to trading, when it comes to the markets, it's supply and demand, right? So when you start to see some of these candles form, these neutral candle patterns form, you already know there's going to be a shift in direction for sure. All right, now here's the bearish. Okay, so as you can see, this is basically a hammer, but it's a little different because the market is going up over here, and then it forms that hammer before the market goes down. So in the bearish setting, this is considered a hanging man. Shooting star is that inverted hammer, right? As you see over here is the inverted hammer, but when the market is about to go bearish. So market goes up, all right, you see the inverted hammer, right, or the shooting star right over here, and then it starts to go down, okay? Here's the gravestone doji, which is basically the dragonfly doji right over here, right? You start to see that, you know it's going to start shifting. So went up, start shifting, and then it goes down, okay? Bearish spinning top. Same as the bullish spinning top right over here. So think of it as like a shish kebab, right? Now we all know when it comes to candles, there's 4 data points. You got the high, you got the close, you got the open, you got the low. When it comes to bullish candles, the open is at the bottom of the body, close is at the top of the body, high and low. When it comes to bearish candles, the open price, all right, is at the top of the body, the closing price is at the bottom of the body, high and low, all right? The wicks are basically the same, representing the highest price that the highest point that price is reached. Okay, the low represents the lowest point price is reached in that time interval. Okay, so when you're choosing a 5-minute candle, 10-minute candle, 15-minute candle, 1 hour, 4 hour, weekly, daily, whatever it is, okay, every time you select the time frame, each candle represents what price has done in those time intervals. Okay, so double candle patterns. All right, so these are 2 candles that form a pattern, and you'll see a lot of these, you know, you'll see a lot of these in the market. So you got the bullish kicker. Okay, so here's one. See, there's a slight gap there. The bullish engulfing, you're gonna hear a lot about engulfing candles. The piercing line, the bullish harami. All right, the tweezer bottom, okay, as well. And on the other side, the bearish. All right, bearish engulfing, bearish kicker, dark cloud cover, okay? So the dark cloud cover is basically the exact opposite of piercing line. The bearish harami, the tweezer top. And then you have the triple candle patterns. Now, in my opinion, the triple candle patterns are the ones that are a little more noteworthy because it provides just, I believe, a stronger confirmation when it comes to candlestick patterns, right? Single candle patterns, you know, you just have to really look out for it. Double candle patterns, it's a little bit more noticeable. Triple candle patterns is very out there, is very emphasized, right? So morning doji star, okay, this is the morning doji star. All right, so price goes down, okay, it does a doji, a short one, all right, look like a crosshair, okay, and then it starts to go up. 3 white soldiers is basically 3 back-to-back bullish candles. All right, and you see they're pretty identical. Bullish engulfing sandwich. Okay, so price goes up, price goes down, right? But then it goes up, and then it reaches past that point where it kind of resisted before. So bullish engulfing sandwich, bullish abandoned baby. Okay, so market jumps down. Here's a gap. All right, here's the standalone candle all the way in the bottom. Here's another gap. All right, this goes up. So you kind of see, you know, what's going on here. There's the bullish abandoned baby. Here's the morning star, rising 3. All right, falling 3. As you can see, it's the exact opposite. So the falling 3. All right, bullish engulfing sandwich, 3 black crows, which is 3 back-to-back bearish candles. Doji, the evening doji star. Okay, so you see the price went up. All right, that crosshair doji right there, and then it drops. Bearish abandoned baby. Price goes up. All right, here's a standalone candle right over here all by itself. Okay, and then a gap and the bearish candle. Evening star. Okay, starts off good. All right, and then it disappears, and then right here it starts dropping down. Think of it like shooting stars. Okay, all right, now here's the most notable candle patterns that you see. Single candle patterns, double candle patterns, triple candle patterns. All right, and now let's zoom out a little bit, because I'm actually going to give you this. I'm going to put this in the group. Okay, so check that out. Now, when it comes to harmonic patterns, all right, I'm going to pull this up. Let's pull this up over here. When it comes to harmonic patterns, all right, let me zoom in a little bit. All right, see, these lines represent, all right, it represents a collection of all these candles. Now, you're going to notice some of these harmonic patterns on certain time frames, mostly on the higher time frames, but every harmonic pattern is basically a reversal pattern. And just to keep it real simple, because I do like to keep it very, very simple, you're going to notice that most of the harmonic patterns are either a double top or a double bottom for the most part. It's a slanted double top or double bottom for the most part. So the MW formations that the candles do, is basically that for the most part. Now, depending on where the market drops for a pullback before it does some retests, it changes the title of these particular harmonic pattern types. Okay, so let's go with the bullish butterfly right over here. So as you can see over here, the market, all right, starts pushing up. Okay, hits a high, then it drops down kind of close to a 50% point. All right, then it goes right back. All right, so it does a double top. All right, and then it starts dropping down. Once it hits that low, it's going to continue to go in that direction. Okay, this is the bullish butterfly. Bullish shark is going to be, you know, pretty similar. All right, you're going to see price moving up. Okay, it hits this point, starts dropping down. All right, it gets right to this point over here. It's basically another double top, and there you go. It's going to start deflecting off of that bottom right there. All right, the bullish Gartley. Okay, so if you notice the butterfly, all right, if you look at the angles of the triangle over here, all right, that's being formed right over here, all right, then you'll start to see that just a slight difference in those patterns, it changes the title of the harmonic pattern. So the bullish Gartley, same thing, all right, drops up, hits this high, hits a midway point, goes back up to the high, goes down to the low, deflects off. Okay, bullish Gartley, bullish bat, all right, up, hit the top, down to a midpoint, up again, down to the low point, deflects off. So bullish, all right. So these are basically M's, okay, and right at the end of the M is going to start shooting up. That's these bullish harmonic pattern types. Okay, the bullish 3 drives. So think of a channel, okay, a channel where the market is basically going in a downward channel, right? It basically forms a W. Okay, look at this. It forms a W, and then it just shoots straight off, all right, from the top. All right, it shoots above this resistance that it was in on the way down. All right, that's the bullish 3 drive. Now, if you look at the bearish 3 drive, it's the same pattern but reverse, because the bearish 3 drive is focused on the sell. So it's going up, right? And then it just starts to break that channel at the bottom, and it just keeps going down, all right? But we're going to stay focused on the bullish for now. Okay, so bullish cipher, all right, same thing. Hits a high, midpoint, high again, hit the low, deflects off. All right, bullish ABCD pattern, okay? So the market is basically going down, very similar to the bullish 3 drive. The difference is that it hits the bottom of the channel and then it deflects up, okay? So in all reality, to me, a bullish 3 drive is more of a completed version of the bullish ABCD. Here's the bullish crab, all right? And you start to see there's not a major difference in some of these patterns. They're basically forming M's and W's within certain levels. Bearish butterfly, okay? Same thing but reverse on the bullish butterfly, okay? So basically it forms a W, all right? And at the top of the W, it starts to drop. Bearish shark forms kind of a W, hits the top, starts to drop. Hits the top, starts to drop. Hits the top, starts to drop. These are reversal patterns. When these patterns complete, it's going to go the opposite way. That's basically what's happening. So this pattern completed is going to go the opposite way where it ended. All right, kind of similar to that. Bearish cipher. All right, pattern completed, starts dropping. All right, bearish ABCD. Okay, look, completed the pattern, starts dropping. Same thing over here. So M's and W's for the most part. Now, what makes them, you know, legit harmonic patterns is if you use the Fibonacci tools, use the Fibonacci replacements. If you're following along with the Elliott waves and you're using market geometry to kind of mark up these data points, then you'll be good to go on that. You know, to consider that a full-on harmonic pattern. Now, like I said, I use a very special scanner that scans for harmonic patterns in the market and also candlestick patterns. So when we put this together, okay, side by side, you notice that the harmonic patterns are basically a collection of more candles, all right, that are working together to form these patterns. Now, most people in the market are not really checking for this. They're not really checking for this. They're not. But I want you to check for this. All right. So I'm going to give you these PNG files right over here, just so you can reference it, just so you can have it. And I want you to notice if there is any of these patterns on your chart. Okay. So I use a very special tool for that. Let me bring this in for a second. I use a very special tool for that. So I call it the Doji scan. So I'm going to unhide this. All right. And I'm going to go right into the settings of it. Okay. So these are basically the candle patterns that I have it scanning for me. And you could change, all right, the settings on the colors where they appear, the arrows, so on and so forth. I have the stars. Okay. I have the stars on all my dojis, okay? I have the stars on all my dojis, all right? But you can change this however you want, all right? I could have this as a star, I could have this as a flag, I could have this as a diamond, as a cross, whatever the case may be, as a circle, right? So you could adjust this how you want. This is going to be an invite only indicator that I'm going to give you as a gift. All right, so I'm going to roll this out with the instructions on it sometime tomorrow. But for right now, enjoy the handouts that I'm going to give you. There's some really cool stuff. And if you want to do some more research on candlesticks, you can literally search it on Google. They're using a lot of the Investopedia, guidelines for it. So you could go and read up more on it. Bearish engulfing, bullish engulfing, piercing line, dark cloud cover. We already covered some of the main ones here. But if you wanna read more on it, then you absolutely can, and you can even watch some of these videos if you want. But I'm gonna give you the sped up version of it, just to keep it simple, right? Because trading is already complicated. Trading could be boring if you're not with the right people. So my goal is that you just get to the bag, right? Get to the bag and call it a day, all right, when you trade. So I hope this was helpful. The next video drop, the next value drop that I'm going to put out after, of course, I give you access to the invite-only indicator. The next value drop I'm going to put out is we're going to talk about Elliott waves. We're going to go into details on Elliott waves, and we're also going to go over Fibonacci retracement. So pretty interesting subjects that are coming up, but I know I haven't been active in a couple of days. Hope you guys didn't miss me too much, and enjoy. Stay blessed. Take care. Your boy Nes. I'm out.